Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The rupee hits a new low as the dollar strength continues to rattle currencies across the world. But the RBI steps in to stem the decline, sparking a late recovery. The Japanese yen weakens against the dollar to levels not seen in more than 3 decades. Markets recover in the last hour, ending in the green. The Sensex rises nearly 100 points. The Nifty gains over 50 points. Bank stocks decline. Asian Paints misses estimates in the second quarter. Margins decline sequentially. Volume growth is below expectations. The management says demand was subdued due to extended monsoons. In a bid to tame rising costs of pulses, the government hints at new rules to crack down on hoarding. The Consumer Affairs Secretary tells CNBC TV 18 exclusively that import of pulses is likely to be mandated. Companies will be asked to release the stock in the market within a month itself. Political turmoil in UK once again as Prime Minister Liz Truss faces calls to quit from her own party members. Home Secretary Suella Braverman resigns, launches a stinging attack on the Prime Minister just days after the Chancellor to the Exchequer was sacked. Well, the top story this evening, the rupee went on a roller coaster ride today. The currency opened at a new low against the dollar and then fell rapidly in early trade. Sources say the RBI is likely to have intervened in late trade, after which we saw a pretty dramatic recovery coming in, and that's the intraday chart for you. In fact, the rupee's recovery today was the biggest that we have seen in the past year. But as things currently stand, $1 just under 83 rupees. But the rupee is not alone. The strength of the US dollar is rattling currencies across the world. The Japanese yen down to a 3-decade low. The Korean won, the Malaysian ringgit, and almost all major currencies in Asia are struggling against the greenback. Lata joins us now with more on the money market action. Lata, dramatic U-turn for the rupee coming in late afternoon.
Well, actually, it's a huge U-turn that we have seen. Where did we start at? 83, almost 83.01. Fell as much as 83.30 thereabouts, 83.28 to be precise, and another 50 pice move on the other side to 82.80. Now, global backdrop hasn't changed much. It is still against emerging market currencies, and other Asian currencies are still weak, and US yields are still high, dollar is still high. What clearly is changing is the flow. Yesterday, we spoke about this one foreign bank which seemed to have had a large buy order for dollars. Now, once that ebbs, then that also takes away a bit of the pressure on the dollar. In addition, banks which knew of this order and expected RBI to come in had also taken positions, at 82.30, 82.50. All of them got hurt and nobody wanted to risk it now. The crux of the matter is it's a very illiquid market. And so even one bank or two bank buy orders can swing the market both ways. And, well, the Reserve Bank was there unexpectedly. The Reserve Bank has this ability to perhaps catch the market napping. Yesterday, a big order came in. They didn't want to stay in the way. They ensured that the buyer bought the dollar expensive. And today, when the wind was somewhat on their side, with not too many buy orders, they just came in and rammed it down, or so it looks, offered a considerable amount at 83.20, and took the dollar below the 83 mark. It's an illiquid market. So, the Reserve Bank picks and chooses the days that it wants to intervene with minimal expense of reserves to maximum impact.
Lata, many thanks for joining us. And yes, we saw that maximum impact that Lata was talking about play out for the currency today. Now, the rally in the rupee rubbed off onto the equity markets as well. The late rebound helping the Sensex and the Nifty close in the green. The Sensex gained nearly 100 points. The Nifty gained over 50 points, but bank stocks declined in trade along with mid-caps, and both the indices ended in the red. There is some relief that's coming in for Vodafone Idea. According to Reuters, market regulator SEBI has approved the government's proposal to convert its pending dues into equity. Rima joins us now with more. Rima, this has been long pending. Vodafone Idea waiting for the government to convert debt to equity. The finance ministry had already given its approval and its nod way back in June or July. SEBI approval, we understand, was pending. That has come through as well. Relief for the company, and now the expectation that the government may convert, though we don't know what the timeline is.
Absolutely. Now, this is significant because the SEBI approval was needed because the government had to convert its stake at a price of 11 rupees 80 paise, while Vodafone Idea's stock price was below the face value, sub 10 rupees. So the SEBI rules did not allow it, which is why the government was seeking the approval from SEBI. Now, that has come through. It paves the way for the government to go ahead and convert. What does this equity conversion pertain to? The conversion of interest on AGR dues, which stand at 16,130, which means once the government converts the interest on AGR dues into equity, the debt on Vodafone Idea's books comes down by 16,000 crore rupees, and the government will be holding close to about a 33% equity stake. As I said, this paves the way for the government to go ahead and convert its stake, but this has been pending since January of 2022, so close to about 10 months now, and only once the government converts its stake into equity will external funding be possible for Vodafone Idea. Vodafone Idea is seeking to raise about 10,000 crore of equity funds and 10,000 crore of debt from banks to fund its 5G plans, but this has been on hold because of lack of clarity on if and when the government will convert that equity. There is a board meeting that Vodafone Idea will be scheduled tomorrow, where they will consider issuance of convertible debentures to a vendor. But this is not going to be the significant news. The significant news from here on will be if the government now converts its stake into equity, at what point of time, the timeline, and after that, will external funds and investors be committing money to Vodafone Idea? Back to you.
Rima, many thanks for joining us. Yes, that is the big question, as Rima was pointing out. With this approval, the approval process for the conversion is done, and now it's a question of when the government intends to convert. The union government is likely to issue fresh guidelines that will make it mandatory to push out pulses into the market within a month of imports. The move is being aimed at curbing the rise in prices and a crackdown on alleged hoarding. Here's the Consumer Affairs Secretary speaking with our colleague Timsy Jaipuria exclusively. Take a look.
By facilitating imports in a hassle-free manner, we are ensuring the availability of stocks in the market, thereby impacting the prices, and I'm sure prices will not go up. At the moment, we are watching the import position in custom bonded warehouses and other domestic warehouses of importers. And if we see a hoarding tendency, we will impose a provision that beyond this number of days you cannot hold.
What could be the proper guideline, if at all government gets down to issuing such a guideline?
I mean, it will depend on the situation. We could say 30 days, 45 days, depending on how much is available, what is the deficiency in the market.
Well, that is something that the government is considering, as per the Consumer Affairs Secretary. Now, industry is opposed to the government imposing a time limit on when they will have to release the imports into the market. As things currently stand, companies have to comply with the stock limit on how much pulses they can hold. And now the government is hinting at a time limit. Manisha joins us now with the details and what industry makes of this proposed move. Manisha, the government is not just talking now about a stock limit, but also about a time limit. You've been speaking with industry sources. What are they telling you on the possibility of this move coming in and the implications?
Well, the pulses as a sector clearly has not a positive response to what the Consumer Affairs Secretary spoke about today on putting in a timeline when it comes to selling or offloading the stock that has been imported. One, the trade feels that the importers will actually start curbing imports because you can't import a lot and then try and sell it at whatever prices and not profitable prices into the market. Two, they believe that since the pulses prices are the only ones within the agriculture sector which haven't increased so much as compared to last year, there isn't really something that needs to be done in this way. Third, they believe that this is just a conversation right now, and before a notification is issued or a more concrete step is taken, the ministries would talk to stakeholders and various pulses associations as well. The fourth point is that when you look at the pulses buffer stock with the government, that is much higher than the required norm of 2.3 million tons. The government holds 4.3 million tons right now, and within this as well, 3.1 million tons is just chana. So there is enough availability of chana and various other pulses as well. The other thing that the markets look at is that there is enough availability of other pulses in the global markets as well. India usually imports 2 to 2.5 million tons per annum of pulses every year, and the only concern that the trade sees is in case of tuar, and that too in the next year. In the near future, especially for the festivals as a season, there doesn't really seem to be a concern on availability or affordability.
Manisha, many thanks for joining us. So industry wary about this proposed move, but remember, a decision has not been taken yet. It is being considered as per the Consumer Affairs Secretary. We will head into a break, but up next, the big order from the Supreme Court, which is likely to have significant implications for charitable trusts. Dinesh Kanabar joins us to explain that and more when we return.